Well, greetings and salutations, Series 7 test takers. This is Series 7 Guru coming to you from my studio here in fabulous Las Vegas with a ride along, a free ride along with Kate as we work our way through an STC practice test. Shout out and thanks to Todd and his team at STC for allowing our viewers to have access to STC content like these practice tests. If you are looking for more marks, more practice tests, you can buy the supplemental of 4 exams from STC for $91. I will put a link to STC to buy the exams if you choose to, and I'll put that in a video description and a pinned comment as well. So let's queue up an exam here. Boom. Start exam. There we go. Show explanations. Which of the following positions would take advantage of a significant appreciation in DEF stock?
The wording, okay. I'm going back and forth on
Okay, what are you
they
going back and forth from?
A and B.
A and D. Okay, I like that. So now you got to think about A and D in a debit call spread, enabled to get significant appreciation. What happens if you buy the lower strike and you sell the higher strike? That would be a debit call spread. Are you going to have significant upside?
No, it's going down.
Well, no, because remember, all the action takes place between the strikes. So you're not going to have a upside there because you remember a floor and a ceiling, right? So
Okay, so it would be A then.
no, it's actually not A because of what we just discussed. In a debit call spread, your max gain is the difference in the strikes less the debit. Now, mark you wrong. But like I say, it should have been, I don't know, Dean could miss it too. I think it's going to be the long straddle. Let me tell you my reasons for why I say it's a long straddle. The reason I'm saying it's a long straddle is because a credit put spread is bullish, but again, it's the strikes, and short straddle isn't bullish. You're going to lose all kinds of money. So I would have said that's D. So let's see. Yeah, there we go. Right. You are on the right track. And you blame that one on me because I told you I wasn't going to help you out or say anything, and I did. So I got to keep my mouth shut as you do this. Which of the following is most likely a double barrel bond? Oh, I kind of like this one. Kind of weird way to test you on it, but I like it.
So I know it's not D, and I know it's not B. So I'm between A and C.
Yeah, so remember the two barrels. So you need two barrels,
Okay.
and one barrel is what, and the other barrel is?
It's like revenue, and then
Yeah,
that is based off of tax.
yeah, that's right. So we need something with revenue.
So C.
There you go. Good job. I've never heard of a double barrel bond to build a zoo, but whatever. Whatever. Who is responsible for the day-to-day operations?
A.
Yeah, the trustee, right? Excellent. I would also know that UITs have a fixed portfolio, professionally selected, and passive management. Excellent. Which of the following statements is true regarding repayment risk?
I'm gonna say B.
Yeah, the phraseology here is kind of interesting. I wish it would have said prepayment. If it would have said prepayment, you would have been correct. So I kind of think this kind of jerky because it says repayment.
Okay.
So there's a difference between repaying your bills, right? The risk that you don't pay at all, right? Is default risk. And then this idea of interest rate. So, if we just I'll just use my annotation tool. It doesn't do you any good here, but RTFQ, if that had a P in front of it, you would have been correct.
Okay.
Right. Prepayment. So I think I kind of consider that a gotcha question. But it proves again this concept if you don't read the full thing, you're gonna will
Mhm.
potentially run into a problem. All right, so not bad. I wouldn't beat yourself up on that one.
Not starting off too hot so
No, you're
far.
doing fine. Remember, we only need you're gonna get a lot of aim and shoot point and click ones too, right? Paul and Mary Smith have discussed various portfolio allocations with their advisor, Chuck. He has considered the Smith's risk tolerance and expected return in order to recommend an efficient portfolio. That is one in which the portfolio offers
I'm stuck on this one. I'm gonna go A.
Yeah, I like that. I would have gone with that too. Boom, good job, right? That's the whole point, right? That's called the whole idea there is efficient market frontier or the feasible set of portfolios. There you go. Efficient is the word. That's more of a 66 question than a 7 question, but it's fair game. Good job. Good job. How is accrued interest calculated on U.S. Treasury securities? How is accrued interest calculated on U.S. Treasuries?
Actual day, so that would be right. Yeah. B.
Excellent. Excellent. You know a lot more than I think you sound wobblier than you should based on the amount of stuff you know.
No, I feel more comfortable with like the wording with Kaplan, but I got to get used to this.
That's right. Which of the following best describes a fiduciary responsibility in a trust?
D.
Excellent. Excellent. Boom. Which mutual fund share class is most suitable for an investor who's interested in opening an account with a purchase large enough to qualify for a breakpoint?
Class A. So
Right
D.
on. Excellent. Which of the following securities would probably have the greatest fluctuation in price when interest rates move up or down?
Treasury bond, so D.
Yeah, right on. Long term, right? Long and low, baby. Long and low. On May 25th, the president of Maxco bought 3,000 shares of Maxco stock in the open market at 33. 2 months later, the stock has increased to 40. If the president now wants to sell his share,
This one I'm a little unsure, but I'm gonna go with D.
B as in boy.
No, I said D.
That's a bad miss. We don't, get permission from FINRA. I think we should have been aware here. He's not going to have any holding period. But remember, the short swing is defined as 6 months. And so here, if he sells that at 40, he's got 7 times 3. He's got a gain. He's going to have to disgorge the profits back to Masco. So this is a question was about the short swing. And the short swing is defined as 6 months. So if a control person buys their own stock, they can't make a profit or loss for 6 months. It's called the short swing profit rule. Right, there we go. Short swing, less than 6 months. So by the way, as you know, we've done this before. As your tutor, this is your first bad miss. We don't get permission from FINRA to sell securities. That's never going to be when selling securities. We do something with FINRA. First bad miss. That's all right. You're going to get lots of misses on the test. Individuals with high incomes and a high net worth. High income and a high net worth.
B.
B, boom. Excellent. That's a suitability question, right? As a test taker, we should shy away from socially pejorative terms like always or never, right? Those are usually not, unless it's like, when can I rip off people? Never. When should I, be acting in my client's best interest? Always. But other than that kind of questions, we want to shy away from those. Which of the following statements are true of non-systematic risk?
I know market risk is non-systematic.
Well, market, okay, you want me to help you or not?
Oh, no, that's not true.
I-
Yeah, business. Well, I'm thinking business. Okay.
Yeah, yeah.
Yeah. It's a specific.
I almost always, when I'm chatting, I always say non-systematic risk, also known as.
Yeah. Okay. D.
Excellent. So you got yourself there, right? You got yourself. So the risk that's not diversifiable is market risk, right? This can be diversified by, owning more than one company. My favorite saying is Bernard Baruch said, money is like manure, spread it around. By the way, the easiest way for somebody to diversify is in a context of a mutual fund. Clients considering whether she should purchase a 6% corporate bond or a 4.5% muni bond. If the client's in the 32% tax bracket, what recommendation should be given to this client?
C.
B as in boy or?
C as in cat.
Excellent. Excellent. I don't know why it is, Kate. You're the only person I have a problem.
With hearing. Oh, I need to speak up. I'm
Do you have
sorry.
an accent or something? My family's from the South. I know I have a accent. Do you have an accent from somewhere? Or?
I don't think so. I'm from
Oh, maybe it's just me. I feel like I have to ask you a lot more often than I usually
I
do.
need to speak up.
You are correct. You are correct, by the way. Good job. Definitely testable. Now you're
Okay.
going to see something almost, exactly like that. Boom. When a market maker gives a quote, stock without qualification, the quote is.
I know it's not B.
It is not B.
Ugh, without qualification, that's what's kind of.
I like doing these too because of the tutor, Kate. Just you commenting out loud, which we need to do anyways, just makes me say, okay, I am so sympathetic to people because, I actually know what that means, but that's because I've done it for a living. Like, it's neat to see different phraseology and see where people could stumble. And I'm always, Kate, so sympathetic to our test takers who English is a second language because I feel like some of these questions aren't in English to begin with. I mean,
No, it's a word problem in itself.
yeah, and it would be interesting to know if we talked backstage to the STC person who wrote the question, if they intentionally meant this to make it more difficult or not. I don't think so because I wouldn't have read it that way. However, doing this with you, I could see where that would become a stumbling block,
Yeah.
perhaps.
I'm gonna go, I'm going back between A and C, but I don't even know if that's right.
I would go back to like our legal opinion, with without qualified, right? Or with reservations, without reservations, right? Qualified or unqualified. Qualified means I'm now going to say something else. If I'm a bond counsel, for example, and I give you a qualified legal opinion. Unqualified means I'm not going to, this thing is good. So this is saying without qualification.
D then, firm
Yeah,
quote.
that's exactly right. Right. So I would know that nominal is for informational purposes only. And then I would know failing to honor a firm quote is known as, what failing to honor a firm quote is known as?
Subject.
Backing away. Backing away. So let's say if a market maker fails to honor a firm quote, this is a prohibited practice known as backing away. Now here it says without qualification, that means I also didn't give you size. So if I gave you size like 15, 16, 8 by 8, well, then I would have to honor whatever size it is that I gave you. Right. But without any qualification, consorts are considered firm for at least 100 shares. All the following are money market securities except.
A.
Yeah, excellent, right? A client is in the lowest tax bracket is considering a tax exempt muni bond. The tax equivalent yield indicates a taxable choice is available and will offer a higher rate than the tax exempt issue. If the client's registered rep insists on the client buying the municipal bond, which of the following is true of the recommendation?
Why would he get into a muni when he's in the lowest tax bracket?
That's correct. So there's a red flag there for sure.
So it's either B or C.
Yep.
They both seem right, but I'm gonna go C.
That was a bad miss.
Oh,
Right. Test taking trick. We should know that when we have two opposite answers, it is usually one of those two opposites. So if it's not suitable, well, then it's what?
unsuitable.
And the tax rate is relevant, right? The tax rate is relevant because if you had a higher tax rate, that might make sense. So we're at question 16. As your tutor, you only had two bad misses so far. And I know you well enough to know you ain't going to miss it again when you see something similar, right? So, which of the following risks are associated with CMOs?
D.
D. Excellent. Excellent, excellent, excellent. A customer wants to sell a security immediately will receive
A.
That's a bad miss. You should know that customers sell at the bid and they buy at the ask. Customers sell at the bid. You always get the low price. You always pay the high price. It's kind of like a car dealer, right? When you come in and say, Dean, how much for a Lincoln Navigator? I go 90 grand. You go, great, I got one. Where's my 90 grand? I go, Kate, no, you need my trade-in price, 50 grand. Right? The difference between what I buy the Navigators at, I sell the Navigators at is my spread. Right. So if this said a customer wants to buy the security, the answer would have been C. The customer wants to sell the security, so the answer is B. Right. So I have a whole lecture called Know Your Bid from Your Ask. Not a big deal. Not a big deal. So like I say, it's, got to get on to the next performance opportunity. Using regular way settlement on Tuesday, June 16th, an investor purchases 8% municipal bonds that mature on November 1st of 2035. What is the dollar amount of the accrued interest? Now, you're not going to have to do this because good news for you, they have changed settlement on May 28th from T+2 to T+1. I've had confirmation this week. For those who may be watching the replay, this is May, 17th, 18th. So that change would have already been enforced, and they withdraw these questions and they reload them, and they don't count. They don't score them until they test them for validity. So my guess is it'll be several weeks or months before people see these kind of questions again, and they're very low probability as anyways. So this week, people have been testing. They haven't seen any settlement questions regarding corporate immunities, which is typical because that's what I just said FINRA does, right? They remove them. That being said, if we are using regular settlement, well, this is still a valid question. So we wouldn't have to pull this question because it tells us settlement is June 16th. So this question is still valid because we calculate accrued interest from the date up to, but not including the settlement date. 8% muni bonds that mature on November 1st. Now that's important because that means it's an M&N bond. It pays interest May 1st and November 1st. So if I'm the seller and you're the buyer, I'm going to say, well, they were my bonds, Kate, for part of June. They were my bonds for all of July. They were my bonds for all of, I'm sorry. They were my bonds for May and part of June. And you say, well, when I get to the check, I'll send you your pro rata share. And I say, well, no, let's just right now figure out how much money that is. And, I'm kind of helping on this one because I don't think you're going to see it, but 8% is $80 per bond, right? There's 20 of these bonds. So we have 20 bonds, they're paying us $80. Boom. That's $1,600 a year in annual interest. We're going to divide that by 2. That gives us 800. And now we got to figure out that 800 is for 180 days. And now we just got to figure out how many days. So how many days does the month have for corporates and munis?
Corporates and munis, you do 30.
That's right. So we are going to calculate from May. So May is 30 days up to, but not including settlement, which is going to be 15 days. So we're going to times that by 45 days. And we should get one of these answers or pretty close to one of these answers. We'll just pick one. Boom. Right. And though, how did I get that? I took the semi-annual interest divided by the 180 period and times it by the number of days, right? So May, 30 days, 16 for June up to, but not including settlement. Oh, well, the trade date was the 16th, so that question would have to be changed. All right, boom. What is the maximum maturity for a money market instrument?
Why am I blanking? 12 months or 270 days? Oh,
Right, that's on me because you were thinking commercial paper, right? Commercial paper and
oh, I
bankers.
was going in between the two. I didn't
Yeah,
say
yeah. So that's on me. I hit the button for 270
okay.
just to show you what you were thinking, right?
Okay.
So good news, though, Kate. That means it's up in your brain housing group. We just got to, pick the right thing, right? So if this had maximum maturity for commercial paper or bankers acceptances, A is correct. But it said money market securities, right?
Mhm.
And that would be 12 months. That would include T-bills. It would include negotiable jumbo CDs. Once an individual owns a variable annuity, decides to annuitize, what is the tax implication?
I know it's ordinary income, but I'm
Okay,
just
well, there you go. So if it's ordinary income, then you got A or C as your choices. You are correct. It is taxed at ordinary income, and you should know that before you invest.
I'm gonna go A.
Remember, you're funding this with after-tax money, money you've already paid taxes on.
So let's see.
Yeah, it's C. That's very testable. Now, if this was a tax sheltered annuity, it would have been A,
Okay.
right? But doesn't say anything. You don't bring stuff into questions. So your earnings are taxed as ordinary income, but the cost base is your own money coming back to you. And so, boom, the answer is C. That is very testable. So good news, as your tutor, we're at question 21. I've only told you you've had 3 bad misses. And this is, I think, the first time I've said that's very testable. And so this is the first miss where I've said, no, is it a bad miss, but it would have cost you. But that's the point of doing this, because now when you see that, you will not miss it again.
Yeah.
Right? You're going to know that you have your own money in there, right? Which of the following best describes that fewer homeowners will refinance their mortgages, which increases the maturity schedule on a CMO tranche?
Putting- So since it's increasing the maturity, it's not gonna be prepayment
That's
risk.
right. That would be the opposite direction. Good job. So you're on the right track.
It's not gonna be past payment risk.
So
Repay.
prepayment risk is interest rates go down, everybody refinances, and the thing ends sooner rather than later.
Mhm. But extension risk would pause. I'm going back and forth between A and B.
It is between A and B. And I don't let the previous questions cloud your mind. I mean, you got to take every question as a new question.
Okay. I'm gonna go A.
That's the right answer, right? Because that's the opposite of what you just told me, right? You gave me the right opposite answer, which was C. right? So this is one of the things about mortgage securities in general, and even see them in tranches, is you have interest rate risk in both directions. Interest rates go down, you're not happy because everybody refinances, your money comes back to you sooner rather than later. Interest rates go up, nobody refinances, and now you got your money tied into a lower than today's return. So, these are do better when we have a stable interest rate environment. Good job. Good job. Which of the following describes a wash sale?
C.
The sale, yeah, like that. Oh, excellent. Right, then what happens is your loss gets disallowed. You know what the time frame is?
30 days.
Excellent, excellent. Each of the following statements are true of an immediate annuity except. An immediate annuity except.
I'm going to go C.
Payments start after the deposit. Yeah, it's the purchase. It says true except. True except, right? The purchase can be made in periodic deposits. Now, immediate annuity means you want the income stream right there, but payments start immediately. So I don't think it's a bad miss. I don't think you're going to see anything like that. What you are going to see is when you annuitize in a variable annuity, one of the choices you have is to annuitize. And what you are going to be asked is what would give the customer the largest monthly check? And you'd say life only. That's very testable. The other test question would be when you annuitize, is this idea of what we talked about earlier about your cost basis and the difference, right? And then your check is going to go up or down based by what's called the assumed interest rate. So I wouldn't worry about this particular question at all, but I wouldn't know those other things about annuities. An investor makes an opening sale of 10 option contracts with a bid price of $7 and an offer price of $7.10. Later in the day, the investor makes a closing purchase when the bid price is $6.50 and the offer price is $6.55. Assuming both trades were market orders, what did the investors gain or loss? So let's see if you remember what I said earlier. I said whenever a customer is looking at two prices, they pay the high price and they receive the low price. They pay the high price and they receive the low price. Earlier, yeah, we had a question about a customer who was selling, and you got tested on does he sell at the bid or the ask, and he sold at the bid. And I told you that if he was buying, he would do so at the asking price. And we said the difference was the spread. So that's what this is testing you on, is do you understand the price at which customers buy and sell at? So if you're doing an opening sale, or if you're selling the security, are you getting the high price, $7.10, or are you getting the low price, $7?
You said you're selling it. So the bid.
There you go. So we got our T fired up, or however you're doing it. So that means we got dollars in of $7. Dollars in of $7. Okay, now we're going to buy the contracts back, and the bid is $6.50, and the offer price is $6.55. So are we going to? What price are we going to get? when we buy? Are we going to pay 650 or are we going to pay 655?
655.
There you go. So now we're just going to net that. So we sold it for 7. We bought it back for 655. I think we are a happy camper. I think we've got more money in than
So it's 450 capital gain.
excellent. That one was testing you again on this idea of do you understand the bid and the ask? By the way, that's pretty good because um, we don't know if this investor sold calls. So we don't know if he has an obligation to sell 1,000 shares or whether he has an obligation to buy 1,000 shares because it doesn't tell us what type of contract it is. But gee, I think that's pretty silly, to take all that risk for $450, but oh well. Which of the following is a characteristics of strips?
So I know it's not B or D. So it's
You are correct. It is not B or D.
I'm gonna go C, form of coupon.
Yeah, that's exactly what it is, right? You're not getting any interest, right? There's an imputed interest you're receiving, and you owe taxes on that. Kind of sucks. And these are good for somebody who needs a set sum of money at some future date, like college education. A customer purchased a muni bond on a 4.35 basis. If the basis has increased 20 basis points, it means that if you want to sound like a player, you would say bips, 20 bips.
I feel like it's not as complicated as it should be.
That's exactly right. I hope you remember that. So don't make your life more complicated than it needs to be.
D.
Interest rates have decreased. Well, if the basis went up, that is true that the price went down. I think it's going to be B, but let's see. I think D is not so much it's wrong. I just think that B would be a better answer, but let's see. Yeah, right. So interest rates have decreased. Well, that's the reason that's a bad answer is because remember, for the yield to go up, the price has to go down. And right, so the price to go down means interest rates had to go up. Right, so you're on the backside of that question. But now you know. So what if I said, let's just try it. What if I said it went up 65 basis points?
You just
65.
take 65
Yeah,
plus
it'd be
that.
5. Yeah, it'd be 5%, right? So
Mhm.
I wouldn't worry about that one. After purchasing bonds in the primary market, what has the investor done?
When I think bond, I think loan money, but
That's exactly correct.
so then A.
Yeah, I think that should be an SIE question. Right? I mean, yeah, it's what you do. Remember, you're either loaning your money to a corporation, you're loaning your money to a municipality, or you're loaning your money to the US government. Absolutely. Boom.
I
Right.
don't know why I keep like second guessing
Well,
myself.
no, yeah, I told you, I can't help you. I'm not a psychologist. I can't help with your confidence, but you have no reason not to be confident, young lady. I mean, you know a lot of stuff. I've spent enough time with you to know that you know way more than your inflections would giveaway or, that you're doing it. So yeah, I think you know a lot. So you got to trust yourself that all that work you put in, all that dedication, all that discipline, all that organization and executing your study effort means that you know a lot of this stuff. Which of the following yields results in the highest real interest rates? Well, that kind of interesting. I kind of, think this is an interesting question. So what is the consumer price index? You know what that is?
Yeah.
So that's a measurement of inflation.
Mhm. So C. Wait.
C is going to give us, well, yeah, no, let's see. Let's just go through it. I think you're right. 10 minus 7 means you've got 3% more purchasing power. 12 minus 8 means you got 4% more purchasing power. 8 minus 3 means you have 5% more purchasing power. 6 minus 4 means 2. Yeah, got it right. Boom. A client purchased a corporate bond at 107 and it's callable at 105. What will the investor receive at maturity if the bond matures 7 months after the purchase? I think this is kind of
Are they just trying?
corporate bond. It's callable 105. The investor will receive at maturity if the bond matures after the purchase.
After the purchase?
Yeah, I think they're just trying to make this, more complicated than it really is. But I haven't seen the questions before, so I'm Kate like you. I have no idea what STC has in mind here. As I say, we talk about them and we riff on them a little bit, but
I
I think I would have gone with process of elimination.
okay.
And so I know that there's no circumstance in which it's going to be D.
Yeah.
And I know there's no circumstance under which it's going to be C.
Okay.
So that means it's either A or B.
I'm gonna go. I was gonna say B, but now I keep going back and forth.
But we got to pick one.
Okay. B.
Yeah, I'm going to go with A, and here's why. It says the bond matures. So Dean may miss it too. We'll see. So I would have gone with A just because I say, okay, I've eliminated C or D and it said the bond matured. There's nothing that said it got called at 105. So let's see what they say. Yeah. Regardless of what you paid, you get the bond's maturity. So all that other stuff was the Jedi mind trick, right? Just trying to get you focused on things that had nothing to do with answering the question. I think that's kind of a gotcha question. What I mean by kind of is it, the grammar is not really clear. I'm sure they take exception to me saying this. What will the investor receive at maturity? You receive par. So which of my statements is not true regarding the correction of an error with a cancel and rebuild? So this is a back office question. Not true.
I'm between C and D. I don't know.
Yeah, I kind of think I like that.
I'm gonna go C.
Yeah, I don't think we want our reps to actually be doing cancel and rebuilds, right? You know, it's unfortunate, but on the test, you got to believe in, human depravity and original sin. And, if I was canceling and rebuild things without checking with the principal, I could be canceling it and rebuilding it to a different account. There's potential shenanigans going on. Which of the following may be a T-bill quotation? I kind of like this one.
So it's A, B, or C. D's out.
Yeah, always, right? Don't ever tell me you can't figure it out or you need more information. That's never correct.
But
And this is testing on the T-bills trade in the secondary market a little differently than do other things.
I don't know why I'm C.
I'm sorry?
C is in cat.
No, it's going to be A because a 4.87 discount from face value is a lower number than a 4.65 discount from face value. So T-bills traded from a discount from face value. So the answer is A. I would not worry about it, but it's the only time the bid is numerically higher than the ask. And even though it's numerically higher, it's really not because it's actually the discount from face. So if you don't know that, then it looks like Dean's willing to buy that into my inventory of 4.87, sell it out of my inventory of 4.65, and I guess I make it up in the volume. So that they're quoted differently, right? 965 bid, 987 offer. That would be a stock, not a bond. And B would be a treasury note or bond, 21 30 seconds, 28 30 seconds. I low probability on that. I haven't had anybody tell me they've seen that in a long time, but the bid and offer do look different. In addition to the new account form, what documentation is needed for a business to open up a partnership account?
So you need a partnership agreement. Oh, what documents?
You should know the trust agreement wouldn't be for partnership, that'd be a trust account. And you should know the articles of incorporation would be for corporate accounts. So C and D are out.
So A.
Yeah. Right. We need, then further, might be overthinking this, but we also are going to need a partnership resolution saying, which partner is authorized to transact. Which of the following factors is most important when consider analyzing the investment portfolio of a client who has a retirement as her primary investment objective? Yeah, I miss these all the time. I've been looking at the answers. I don't really have what I really like. I think I can always get rid of C.
Yeah.
And I think I can get rid of D. So now I got to decide, is more important is her net worth or age?
Oh, I guess age based off of retirement, but I don't
Well,
know.
I think age is pretty good. We may miss it, but I would think I'd go for time horizon. I mean, that makes more sense than net worth to
Yeah.
me. What do you think? Should we go for age?
Yeah.
Woohoo, we got it right. Woohoo. I struggle on suitability questions like this because I just struggle because either I want to put them in stocks or I want to do something.
Yeah.
These questions, I call these the judgment questions. Remember, the three styles of questions you get on the exam are recognition, practical application, and judgment questions. Earned income is defined as.
When I think earned income, I think of like wages,
That's right.
salary,
So it's one of those goes to the wages. You're absolutely right.
A.
Yeah. The way I think of it, Kate, that's you working for money.
Mm-hmm.
I'm struggling, Kate. I'm at the crossroads. I told you, I appreciate you working with me, but I told you, I think of myself as a semi-retired stockbroker, and I have enough money working for me that I don't need to work for money. And, I got this channel now. I got tutoring with you. I've got I mean, hey, it's good money and I enjoy people's company and I'm enjoying it or I wouldn't do it, but I kind of go, oh,
Yeah, it's
I
a
think I got
lot.
myself a job again.
Yeah. You thought you were retired, but not.
Yeah, yeah. So, I always think of my baskets of income, right? I got me working for money. I got my money working for me, and I get distributions from partnerships. Those are all taxed differently as well, right? But you're right on. That's your paycheck income. By the way, I always used to use that when I was a practitioner, saying the idea, Kate, is we're going to get enough money working for you that you don't need to work for your money any longer. Woo! Right? Instead of calling in sick, you can call in rich. Say, I'm not coming to work today. And they say, why? You say, I got an eye problem. What's wrong with your eyes? I can't see coming to work. Which of the following types of securities? I had a guy on the live stream, our office hour, and he was at JP Morgan. He looked like a pretty senior guy, and I kind of teased him a little bit about, why is he, taking advantage or free riding? This is supposed to be for people who paid for tutoring or paid for other things. And but anyways, if he's been at JP Morgan for a while, and that's what we were talking about, people coming in the office. What I love about our industry, if you're poor and deserve to be rich, it's our industry is for you. And what I like is there is a lot of people who are still coming to work each day, even though they don't have to, because they
Yeah.
do enjoy it. So, that guy had the look of a guy like, that if he didn't want to be at work, he wouldn't be there.
Absolutely, yeah.
And I think that takes care of a lot of motivational difficulties. And I was kind of teasing him that it's unfortunate because now that we don't have people coming into work, you don't get the mentorships from those men and women that are more senior that, used to be part of the daily kind of thing, right? Is, talking about business and things like that. Which of the following types of securities presents the most risk?
D.
Yeah, right. Unsecured debt. Boom. Municipal bonds are available for purchase that cover three separate townships and a single park district that they each have in common. What type of debt relationship is being described? I like this one.
When I read this question, I think of overlapping.
Well, you're on the right track. It is. It's overlapping debt is this.
That
It's the same as one of these words.
B.
Yeah, coterminous. And the way I say it is coterminous is Latin. When two or more people are living in the same geographic area and they share some of the same geographic boundaries. Excellent. Clients purchased $30,000 worth of securities in a new long margin account. To meet the initial margin requirement, how much equity must be placed in the margin account?
I think this is what they're asking. 15,000?
Yeah, it's got to be half, right? Boom. I like this. We're on question 38. This is the first margin question we've seen. I think most test prep vendors, in this case, STC is not guilty of this yet, but most test prep vendors, Kaplan, Knopman, Past Perfect, STC, go way overboard on margin. And I do like the question. I'm giving STC some kudos here. It's a pretty straightforward question. Doesn't word it that way, but most of the 3 or 4 you are going to get are straightforward, right? Now, by the way, I think what they're hinting at is that you could have given me securities. And if you want to give me securities, that would have been twice that, but that wasn't the question. An investor purchased several general obligation and revenue bonds issued by the state of New York. The investor can have diversification in all the following choices, except well, I'm not even sure what they're asking us here. An investor can have different diversification, all the following choices except. Okay, I think I got an answer, but I don't know if I'm going to be right.
I think it's C because they're all in the
Yeah,
state.
that's what I was going to say too. I was looking for Puerto Rico. Where I was struggling a little bit is I was thinking that I could give him geographics. Okay, I had to go back and read it and say, are they
Mhm.
asking about the existing portfolio or what can I do for him? So good job. An investor bought a 6% US Treasury bond for 1,000. The bond last paid interest January 1st. If the bond was purchased on Wednesday, February 26th, how much interest would it accrue?
Is this similar to the one we just
It
did?
is, and I think it's very unlikely, but what I like, there's a lot of ways to do math. So I would have taken, okay, I know that $30 covers 100 and half the year, basically, right? There's going to be two semi-annual payments, 6% is $60. So it's $30. And now I got to figure out how much of that is going to be paid. So we got January 1st, we got 31 days in January because it's a treasury. And then it's going to settle on the 27th, so 26. So 31 and 26 is we're going to have 57 days of accrued interest. And so now I'm going to take 60 divide by 365 to figure out how many interest per day, right? And I'm going to times it by the 57 days. I come up with $9.37.
Mhm.
You see how I did that? I took $60, I divided by 365. That's the interest per day. And then I had to figure out how many days of accrued interest. It's a treasury, so 31 days in January, up to but not including settlement, 27th. So that's 26, and I times that by the 57. I think it's more likely, by the way, that you would get tested on the number of days, and even that's low probability.
Okay.
So these accrued interest questions are low probability on the test. Common and preferred stock are similar in that.
So you can get rid of C and D.
Right on, right on. You
I'd
should
s-
definitely know preferred stock doesn't vote. And boy, as your tutor, you turn me on because you should never use the word guarantee in our business. What's the other word you never use?
all like when you say all women.
Approved. Yeah, we
Oh,
never say anything's approved. We never say anything is guaranteed.
I'm gonna go A. Oh,
Badness, badness, because dividends are not fixed. Bank of America's dividend on its common stock used to be 18 cents a quarter. Now it's 21 cents a quarter. It could be 24 cents a quarter. You'd be correct. Preferred stock dividends are fixed. And remember, it said similar and that. They're not similar in dividends and fixed. On the common stock, the dividends are not fixed. On the preferred stock, it's a fixed stated rate of return. But in both, the board of directors has to declare the dividend. If the board doesn't declare the dividend, you're not entitled to it. So I think the answer here is going to be B, right? Well, let's see. There we go.
okay.
Right. So preferred stock, the dividends are fixed, but common, they are not. Right. The board has to declare the dividend. Once the board declares the dividend, it becomes a current liability, meaning it needs to be paid within 12 months, and that would cause our working capital to decrease. By the way, you were on a pretty good roll there for a while, so that's not bad. Not bad. Which inventory evaluation method shows the greater profits in a period of rising costs? So I always like to think, I have some widgets in my warehouse, and I've paid, varying prices for the widgets. And now I'm selling my widgets, and they're asking what inventory valuation would give me the greater profit, the last widgets into the warehouse or the first widgets out? Or the first widgets in the warehouse, or the first widgets out? Or, by the way, you should have been able to eliminate C or D because that has nothing to do with inventory. Right? So I think we should have got this to a 50-50.
B, FIFO.
Yeah, so what we're asking about is margin, right? A margin. Good job. Usually the first widgets you bought are the ones you have the lowest cost on. Right? So good job. Excellent. That's it. That's about, I think, as high a judgment question as you'll get on a balance sheet kind of thing. So good job. The yield spread, the yield spread. By the way, spread always means difference.
Mhm.
I said I was going to help you out, but I think I accidentally did.
B.
Yeah, that'd be better. My bad. The reason I think that's so important is because whether it's a credit spread or a yield spread or a debit spread, or, I always try and get across to people, spread means difference, right? My friend and I are going to the casino tonight. The game's on. What's the spread? That's the difference in the scores.
Mhm.
And so that's what the word spread means. I wish we used the word difference, but we don't. What's the yield to maturity on a 10% corporate bond trading in the secondary market at 80% of par, $800?
B.
I don't know. I haven't done it, but I think what I would have done is I would have taken my current yield. So I would have taken 100 divided by 800, and I would have got a current yield of 12.5%. And it is a bonded discount. I think you're correct. Did you use your teeter totter? Excellent.
Yeah.
Excellent. An investor buys a DEF April 35 put at 3 and simultaneously writes a DFE April 30 put at 1. The maximum the investor can lose on this position is.
Sorry, these ones take me a little longer.
No, no, take your time. We're trying to simulate on any of your practice tests. Have you had any time constraint?
No.
So there you go. So, take your time. Don't, everybody's a little different. And the first person who offered the other people a free ride on doing practice tests like we're doing, Kate, was Lauren. And, I don't know, can you be a celebrity on Dean's channel? I don't know. I guess, maybe. But Lauren, oh my goodness, she was taking so long. And I was, the producer in me was kind of like, geez, Lauren, nobody's going to want to watch us for 4 hours. But what I thought was really unique about Lauren is she's one of the few test takers that, man, she would take so long that I was afraid she's going to talk herself out of the right answer, because she'd start talking and she'd have the right answer. And instead of clicking the button, she would continue to kind of,
Yeah.
float. And good news though, she's one of the few people that then would reconnect and get the right answer. But for most people, I would say, listen, you got the answer, just just answer. But same thing, she had no time constraint, and so take all the time you want as long as you've done your. What I really get aggravated, Kate, as a tutor, is when people tell me on the real test they had a time constraint. And the reason it aggravates me so much is because that means they didn't do enough practice tests to kind of
Mhm.
know what kind of rhythm they need to get through 135 performance opportunities, right?
Max loss. C, 300.
Well, let's see. I paid out 3 and I brought in 1. So I'm out of pocket
Oh,
200.
200. Yeah.
Yeah, so 300 is the gain,
Yeah,
right?
200.
Now I'm thinking what took you so long in a good way is the don't hate the eight, that we identified this as a debit spread. So we would know we want the spread to exercise. We would know we want the difference in the premiums widen. We should know our max gain and loss add up to the difference in the strikes, which is 5. Of the 5, we spent 2. That's our loss. So if the spread was exercised, I would be buying the stock at 30, selling at 35. That'd be a 5-point gain, less my 300 is my max gain. My break even is 33. Higher strike, push, put, subtract from the higher. And this is a bearish spread.
That was a bad miss.
That's all right. It's all right. You weren't in left field. So that's, as your tutor, I don't mind when people miss things, particularly just when they're not like, hey, over here. So you're on the right track. Which of the following best describes a subscription agreement? I'm not sure why STC thinks this is something to ask, but hey.
When I think of subscription agreement, I think of partnership.
Yeah, you should think of that. That's a good thing to think about. Excellent, excellent.
I don't know what they. I'm gonna go A.
I think it's going to be D, right? It binds you to the partnership. It's what signs you up, right? So I used to use this as a marketing opportunity. I'd say, hey, Kate, welcome to the partnership. Welcome, partner. In fact, I call my lecture, welcome, partner. Right. So the duties and the response, that would be the partnership agreement. A is the partnership agreement. And that would be the responsibilities, duties of the general partner. Right. Now you know. Now you know. I just had somebody tested yesterday and told me he didn't have any partnership questions. I said, well, I'm not surprised. I would expect 2 or 3. People always ask me over and over and over again, do I have to read the book? Do I have to read the book? And I always say, yes, you have to read the book cover to cover. And sometimes I get weak. And I say, okay, if there's only two chapters you can rip out of the book and not worry about, it's margin and partnerships. Because the test prep vendors spend way, way too much time on that as compared to what you're actually going to receive on the test. When recommendations are made to clients, the broker dealer must.
Well, we talked about they should never make guarantees.
That's exactly right.
Yeah.
We said there's 2 nasty words. We don't use the word guarantee and we don't use the word approve. I used to joke with my clients, Kate, I'd say my crystal ball is broke. Whenever they'd ask me something about the future, I'd say, I don't know, my crystal ball is broke. How many days must pass before a member of the syndicate may extend credit to a customer for a new issue? I like that. That's a good one.
I go back and forth between 90 days and 30 days.
Which one was the one that came to your mind first?
I'm gonna go 30 days.
Yeah, usually your flash response is your best answer.
Okay.
So, usually best practice is your first answer is your best answer. So does that mean you can't buy an open-end mutual fund on margin, right? Because an open-end fund is continually offering new shares. Can you purchase an ETF on margin?
Yeah.
Yes, right.
What is the 90-day? Isn't that with IP?
Well, 90 days, a lot of things are 90 days.
Yeah.
We can backdate a letter of intent for 90 days. A Form 144 is good for 90 days. I know there might be more. There's a couple I can think off the top of my head. How are gains resulting from short sales taxed? I don't care what kind of short sale it is. There's no short sale that will ever qualify as a long-term capital gain.
So it's short-term gain.
Always, always, always. Always, always, always. What's the advantage of owning a convertible preferred stock?
I'm stuck on this one.
Yeah, I had to read it twice. The phraseology is STC is a little different for sure.
Yeah. I guess B.
B as in boy. Yeah, that's the only one that makes sense, right? I would like it says exchanged or whatever, traded in, but the language makes it that the right answer. I would have also could have used process of elimination on that. When examining a balance sheet, a company's current assets minus current liabilities equals.
D.
Yeah, that always means you're subtracting difference again. That means difference. I like this answer set a lot. Quick assets is the current assets less the inventory. Current ratio is current assets divided by current liabilities. Cash flow, I wouldn't worry about, but cash flow would not include the depreciation. We back out the depreciation. So good answer.
Should you kind of know how to like look at an income statement and be
I
able
think the balance sheet itself is more important. I like that answer set. It could have been either quick ratio, current ratio. It was working capital in that case. You're going to get a couple balance sheet questions. The channel is going into its fourth year, Kate. In the first 2 years, I had no lectures on balance sheets because I just didn't think it was important to material to people passing. There are now 2 or 3 balance sheet lectures on there where I go through the balance sheet. As I mentioned to you in a previous tutoring session, the balance sheet is on the 7, but it's not a big deal. But on the 66, it is one of the major differences. The 66 has a lot more balance sheet stuff than does the 7. So sometimes I think you should feel good. You come into that 66 with a 7 testing victory. And, some of it looks familiar, but I'm just telling you, there's going to be some things that are different and some things that have a little more depth. And balance sheet financial statements is one of them. If a client has a monetary dispute with a broker dealer, she must bring it to arbitration within.
or 6 years. C or D, right?
It is. What was your first response?
I was gonna go 5 years.
Was that your answer? And you want to stick with that, or you want to go 6? You're correct. It's one of the two.
6 years.
Yeah, the statute of limitation for arbitration is 6. 5 years is money laundering. So money is 5 years is the CTRs and the SARs, the currency transaction reports and the suspicious activity reports. And the vast majority of brokerage firm records are 3 years. There are some 6-year records at a broker dealer, very few. Those are called, the way I think of those 6-year records is items of original entry, like the general ledger, the blotters, the things we bought and sold each day. I think it makes sense that customer statements would be 6 because we don't want to go into an arbitration case and the customer has records we don't have, so that would be embarrassing. An individual wants to annuitize his variable annuity contract. Oh, this is very testable. I know about you, Kate, when I take a test, I like to get to the first question. I know the right answer too. Like, all right, something on this I know. And wants to maximize his monthly payment. He's unmarried. So he doesn't have to worry about any significant other, doesn't intend to include a beneficiary. Oh my goodness. So he's just telling that insurance company, you just got to pay me. Uh, and I'm kind of hinting again. I said I wasn't going to do it. Which of the following is the most appropriate settlement option?
So he's monthly payments, not married. So if he's not married, he's not going to do the joint.
Oh, I like that. That's what they're get rid of the.
Uh, doesn't intend to include a beneficiary. So I know with like straight life, once it's, yeah, I think it's D.
Well, your life and your life only. That's very much a test question. Very much a test question. In bankruptcy, the common stockholders are
The last in line.
absolutely. New bond orders that are placed prior to awarding a bond underwriting, bond offering to the syndicate are
He's confused. New. I'm gonna go D.
yeah. I haven't had anybody tell me. I have a video where I say, tips, tricks, and memory aids, and I get this all the time, Kate, where people say, "Oh, you don't have pro golfers don't miss. You don't have pretty girls date more. You don't have pretty guys drive Mercedes." And I said, "Well, I don't have that pre-sale group designated member order thing because nobody told me they've seen it in years. But this is order priority and syndicate. You are correct that the pre-sale orders get filled first." Right. And then group orders are also known as an undesignated order. I split that with the syndicate. Designated is where the customer says, Dean, designate UBS or whoever, Merrill Lynch for this order. And then the bonds we want for our own inventory, our own UITs, our own mutual funds, those come last. Which of the following circumstances is not a reason for rejecting a municipal bond delivery? So this is back office stuff. So, the buying broker dealer is refusing to settle with me, the selling broker dealer. He said, the Uniform Practice Code, I'm rejecting the trade. I'm refusing to settle for a valid reason. And so this is asking you which of these is not a valid reason to reject a trade from the selling broker dealer.
I mean, I would think like a sudden change in the market.
Yeah, no, you've agreed to the trade. We're going to have less of that now going to T+1, right? Because that gives people less time to fail. Or, fail means you don't make good. Which of the following statements is not true? Which of the following statements is not true?
D.
Yeah, come on. We're not going to ask the shareholders. That's the board's decision. What is the main incentive for opening and contributing to an individual retirement account?
Well, like you do want to have savings for
Yeah,
your.
I'm with you. I'm just thinking, do I need an IRA to actually do that? So I think I like A too, but then I'm
Then you
thinking,
can't the tax defer, isn't that?
yeah, I think that's what they want us to say. I think because here's my rationale. Let's see if we get it right. I'm thinking A is why I'm telling you to do it, but you can save for retirement with outside of an IRA.
Yeah.
Right. So I'm thinking then that I say, okay, when I go there, I go, do I need an IRA to save for retirement? Not really. I mean, it's a great way to do it, but it's not necessary. Let's see if we get this one right. I think we're going to be right. The money doesn't grow tax to free. That's out. And the funds can give in tax free to a beneficiary. It depends on the circumstances. And I don't like the word tax free. Tax deferred is the better word. There we go. So I think both our rationales we were on the same page on that one, I think. Into which of the following accounts can money be invested for a minor without forming a trust?
B, UGMA,
Yeah, absolutely. And then that's very testable. The kid's tax ID number goes on the account, no margin One minor, one custodian per account. That is very testable. If an investor owns a convertible bond, what will she receive upon conversion?
I don't know why I'm blanking. I'm going between par value and common stock.
What you will receive, how do I give you par value? Why would I give you par value?
Oh, okay, so convertible
Right? I mean, I'm gonna get you,
stock. Yeah,
yeah, right. Par value would mean I'm gonna give you $1,000.
yeah. Okay.
It says upon conversion. So if you convert, I'm gonna give you X number of shares of the stock. In a Reg D offering, when can a qualified institutional buyer sell to another qualified institutional buyer?
Hmm. Immediately or 6 months?
Yeah, there's who, they're supposed to take care of themselves, right? I always think of like T. Rowe Price and Fidelity. They're
Okay.
quibs, trading amongst themselves. Who cares, right? There's no retail clients involved in that. It'd be very easy to miss this with 6 months for unregistered shares because that's what you're buying is unregistered securities. Quibs, remember this from your SIE. A quib is 100 million or more in assets under management, and they're allowed to buy unregistered, key point, unregistered foreign
Mhm.
and domestic securities. All the following statements is true regarding a bond trading at a premium. Oh, which of the following is true of a bond trading at a premium?
D is in dog.
Yeah, you're good at those. You're pretty damn good at those ones. I think you're going to get all those you're entitled to. So, by the way, the good news is you're going to get a twofer. You're going to get those relationship questions on your 7. You're also going to get them on your 66. So you're going to be pretty solid, pretty solid. A short-term municipal bond backed by the full faith and credit of the municipality and paid by tax revenue is known as,
Tax revenue tan, right?
yeah, absolutely. I just wish we could get that little,
I
question out of
know.
your voice kind of thing. It's a tan. That is testable. Do you know what kind of rating tans have? They have MIG ratings.
Oh,
MIG ratings, right? A band would be a bond anticipation note. You get that from your underwriter. If a registered rep is subject to a complaint and requests a hearing before the hearing panel, which of the following statements is not true?
not sure. I want to say A because can't they appeal it?
I kind of, you should have been able to process of elimination, got rid of B because you should have known B to be true
Yeah.
and you should have known D to be true. So that got you 50-50. Excellent. Right? Which of the following is not true? This is aggravating, Kate. So you win, and then they say, no, you didn't. We'll
Oh.
see, we're going to appeal our own process. I mean, Clio, a client, a TLC broker term anticipates a decline in the earnings of LPOP. LPOP is a thinly traded issue. Which of the following statements best describes what you should disclose to Kyle?
I know for sure it's not D.
I like that. I like that. I think, as a test taker, you're getting better because you're going now to process of elimination. You've eliminated D. Is there another one you can eliminate? I think there should be another one you can eliminate pretty quickly.
Would it be eliminate C?
Yeah. You don't mark
Yeah.
it long, you mark it short. So C's out. So now I got a 50-50. And then I told you about another test taking trick as you get better at being a test taker. I do take some heat because I'm one of the few tutors that believe in sharing test taking tricks with people. But I gave you another test taking trick about shying away from all in kind of phrases like always or never or
Like when it says all securities.
yeah, come on, that's a pretty big damn universe.
Okay. A.
Yeah, right.
Thanks for the help.
Well, yeah, I said I was going to help you, but part of what we're doing too is not only getting a mark, but also, you know,
Yeah.
turning you into a better test taker. By the way, even if you're not a better test taker, Kate, even if you think you are, that's worth some points. Right? So if we can convince you, right? All securities, no, they can't sell short anything you want. The purchase of U.S. Treasuries is least likely to meet which of the following investment objectives? And I don't know if I've shared this trick with you. I call this the Sesame Street trick.
I don't think I've heard it.
Okay, the Sesame Street trick. I don't even Sesame Street still out there. Are you, Kate? Do you know about Sesame Street?
Yeah. Yeah.
So the Sesame Street trick is when I was growing up, they used to run this thing on Sesame Street where they would say, apple, apple, orange. They would give you some kind of a set of things. And they say, one of these things is not like the other. When people make fun of my test taking tricks, I say, well, let me give you an example. Tajikistan, Afghanistan, Pakistan, India. Not knowing what the question is, I would say India, just because it's different than the others. Right. So one of these things is not like the other. That's called the Sesame Street trick.
Okay.
One of these things is not like the other. You could also get this with another test taking trick, which I use called principle of exclusion opposites. Socrates is a dog, Socrates is a philosopher, it can't be both. So you have an investment objective here is two of them that are opposites. And if the two of the investment objectives are opposite, you can't get both.
I'm going to say
Least likely, well, no, you're buying a US Treasury. Are you overthinking inflation, perhaps?
Maybe, I don't know, high.
Yeah, you wouldn't go for capital growth in a Treasury. If you want long-term capital growth, you need common stocks.
I don't know what I was thinking.
Yeah, common stock. Well, you probably got distracted with all my test-taking trick questions. Which of the following is true regarding a variable annuity?
So it's either A or C because it's
You
the
are correct. You are
separate account.
correct. What is the separate account? What is it?
But I'm confused if I need a exemption.
But yeah, I would just tell you as a default, you should err on saying something should be registered rather than saying something what?
Is exempt. Okay. So A.
Yeah, the separate account is mutual fund. Every time I see the word variable annuity, I would translate mutual fund with insurance wrapper. Mutual fund with insurance wrapper. So that mutual fund is an investment company and it needs to be registered as a mutual fund. Right, so that's, you got it correct. I don't really, as your tutor, I'm not worried about this particular question. But what I want you to take away is mutual fund with interest wrapper is that anything that I would ask you about a variable annuity separate account would be true if it were a mutual fund, right? For example, how often do we have to calculate the value of an accumulation unit? Once per business day. Does a separate account have to have a specific investment objective? Yes. Right. So, just think mutual fund and insurance wrapper. An inverse ETF is suitable for an investor. I kind of like this one.
So inverse, it's when it's doing the opposite of
That's
what.
exactly right. That's exactly correct. So you're the opposite. So you're looking for the person who is worried about the opposite.
They want to hedge against.
By the way, my test taking principle of the opposites, right? Socrates is a dog, Socrates is a philosopher. You got A and C that say opposite things.
Yeah,
So that means it has to be what?
either one of those. Yeah. Just when they say bearish, bullish, how do you know what they are? What the inverse? I'm gonna go A.
Excellent, right? So you're worried about the opposite market direction. So if you were worried about bearish trend, you want something that goes the opposite. So if it's inverse, then the market goes down, the inverse ETF goes up. Excellent, good job. A company's net income is equal to its total income minus. So that means we've already taken some stuff out already.
So for sure, minus operation expense.
That's right. That's right. Net income. Yeah. When I think of the income statement, I always think of what people usually refer to as the top line and then the bottom line. What is the bottom line?
I would think that tax would be in there.
Yeah.
Bond interest, preferred dividend. I don't know about that though. I'm between C and D.
You're correct. It's either C or D.
I'm gonna go D.
I like that. I like that. Oh, right. We don't, we get after that, we pay our preferred stockholders, but it's a good miss. It's a good miss, right? Then we pay our preferred dividends and then it's going to be earnings available to common, right? So not a bad miss. I think that's about as high as the in balance sheet question as you'd ever get. So you answered earnings available common. I still, as your tutor, don't have any problem with that, right? So we're going to pay our preferred stockholders and then we're going to have earnings available to common. So net income is before we pay our preferred stockholders their fixed or stated rate of return. Penny stocks.
D.
Very testable. What else is testable? You get a statement how often?
Monthly.
And you have to sign a suitability statement unless you're a
Already like existing cut.
established customer. What makes you an established customer?
You've done like three different
That's
trades.
there you go. Excellent. Or
Um,
you've had funds with us for a year.
a year. Okay.
Yeah, you're solid on that. That's very testable. A rally in the market that's supported by heavy volume is considered.
I don't like how they word this.
Yeah, well, that's why we're doing it. I mean, I agree the phraseology. So what we got to decide here is
Heavy,
what we got to decide is heavy volume a good thing or a bad thing, right?
a good thing.
Yeah, I would think so, right? I mean, who knows? We may miss that, but we might run out of buyers, but we could overthink that, but that's a good thing. It means lots of people are buying, right? So that's confirmation.
When have you
Confirmation.
ever used neutral?
Never, except for short straddles.
Okay.
Short straddles, or sometimes they'll use neutral when it applies to a covered call, because in a covered call, if the stock remains unchanged in either a straddle or a covered call, you might still make some money. So, those would be our neutral strategies, as so to speak. The cost basis, this is very testable, of inherited securities that appreciated after the original purchase price. That has nothing to do with answering this question.
So it's usually when the date of the death, market.
Right on. Remember that if it's a gift, right, they assume my cost base. Excellent.
Mhm.
Very testable. Which of the following need not be pre-approved by the firm? Need not be pre-approved by the firm.
I'm between B and C.
Yeah, this one's a tough one. We should definitely know advertising has to be pre-approved. You can't run an ad without approval.
So research.
Yeah, it depends how we're going to classify the research report, retail or correspondence. I would have gone with D. Let's see what it is. Yeah, I would have gone with D.
Was
So
okay.
Kate wants to go talk to the Rotary, or you want to go talk to the Lady Investment Club or whatever, right? The reason I'm going to say research reports is research reports have to be approved by a principal because they're sales literature. We're hoping that you're going to be impressed and you're going to open an account with us. And sales literature is known as retail communication. So, by the way, I wouldn't worry about this question, but I would definitely know the definition of retail communication. Do you know what that definition is?
Mhm.
I'm
Third,
sure you know, yes, but I'm going to just be a jerk and say, well, prove it.
um, that's 25 or more.
No, more than 25.
I didn't say that wrong. More
You
than
did,
25.
you're consistent as your tutor. You're consistent. Last time I asked you to prove it, you
I
said
know.
more than
30,
25. And then remember this, if it is retail communication,
it
does it
needs
require principal approval pre or post distribution?
pre,
And then correspondence is,
pre or post
yeah, that's
approval.
right. It's 25 or less. By the way, that was your first miss in quite a while, actually. So you're on a good roll. What of the following statements is true regarding current yield? So you remember my test taking trick here? A and D say opposite things.
Mm-hmm. So it has to be one of those.
That's right. Listen, do not send me, if you're watching this on replay, don't send me emails about test taking tricks. If you don't like it, it's a buffet. Take what you like, leave what you don't.
I'm gonna go A.
When I get stuck on one of these, what I like to do is make up some numbers and just play it out. But you're pretty damn good as your tutor. I don't think you've ever missed in any one of our sessions the relationship of yield and price questions. I think you are very solid. I don't know if how you're doing it, if you're using the teeter totter seesaw, or you're just a genius,
No.
but you're going to rake up all those points you're entitled to. There are points available for that expertise. What I was going to say though is if you get stuck, you can make up your own numbers and just play out the numbers and see what happens if you do what it says.
Yeah.
Which of the following securities is not a type of municipal fund security? Which of the following is not a type a municipal fund security. Boy, I always say, Kate, RTFQ, read the full question. RTF, read the full answer set. And boy, our friends at STC, I got a, RTFQ with a asterisk, right? Because we got to be real careful when reading this question, which is not a municipal keyword fund security.
This one's tricky. I'm gonna say A.
That's correct, because that is just a municipal security. It's not a pooled security. Right? So boy. If an at the opening order is not executed,
C, it'll be canceled.
boom, you can't do it. We move on. Which of the following is an advantage? By the way, we would cancel because otherwise we'd be taking discretion. Which of the following is an advantage of a closed-end fund? I like this. You're going to get lots of questions where you got to compare and contrast closed-end funds with open-end funds. So which of the following is an advantage of a closed-end fund?
So I can eliminate A and C.
Right on.
I'm gonna go B.
Yeah. You want more test taking tricks or not?
Yeah.
Remember, we only use test taking tricks when all else fails. It would be better that you know the information. That being said, another test taking trick is the longest answer. I call this trick too long to be wrong.
Is that
Too
all?
long to be wrong. Now, the reason that works is because sometimes people write tests. By the way, people who write tests like Brian Lee, my friend, and his test geek, and Chuck Lowenstein at Kaplan. I don't know the guy at STC, but the reason they get mad at this is why it works is because the person who writes this question usually starts with that answer first. And then they reverse engineer that what are called distractors. Distractors are the technical name for wrong answers. And then so that means the distractors sometimes end up being not as long as the actual answer. Now, remember, we only use test taking tricks when all else fails. We don't just just don't look at the answers that take the longest answer. But when all else fails. Okay, you want one more? All else fails?
Yeah.
When all else fails, another one is guess B. Guess B. And the reason that works is I had a guy who was teaching this creme de la creme of financial educational establishments. These are men and women who have gone to Harvard and Yale and Princeton and Stanford. And I came back from a break and I heard a guy telling somebody guess B, and I teased him unmercifully. And my problem is I tease past it's being funny anymore, and I could tell he was getting mad at me. Now to get their attention, I give them homework without the answer key, so they get their attention when they come back and the next morning. Anyways, he threw my own answer sets at me and said, Dean, 44% of your own answers are B without the answer key. But, and he said, Dean, I forget which one of the Ivy League schools it was, but we did a survey of cram courses and they tell people to guess C. Test takers, tips who write tests, no people are told to guess C. So they statistically shy away from it. And by the way, he's right, because I write a question, I go, oh, I don't want that Kate to get this by guessing C. So then I move it.
Yeah.
So, now remember, we only use test taking tricks when all else fails. Which of the following features applies to class B and not class A? That is very much a test question. You are going to get tests in A shares, B shares, and C shares.
The answer would be D as in dog.
Absolutely. Good job. Remember the other test question? The B share is for somebody who has a smaller amount to invest in a long time horizon. A is large amount to invest, long-term high time horizon, and the C share is not long-term. With no other securities position, investor sells short 100 shares of ABC at 40 and sells one ABC October 40 put at for 500. The customer will break even when the price of the stock. I am noticing this seems to be a little light in options.
Yeah.
It's like our second or third option question, not a lot. I think we had a debit spread, and then we had, is that it? A debit spread?
I think there's only been like two so far.
Yeah. I would expect more on your actual draw.
C.
Excellent. I'm so impressed as your tutor. Most people would blow that. I'm not going to talk about how they would blow it because they wouldn't recognize the stock. And that has unlimited risk. So I'm very, very impressed. The risk of the bond issuer will not make its principal and interest payments on time is referred to as.
Why I'm blanking. It's A or B, but I default risk.
There you go. Yeah. Remember what I told you about spread? What would spread mean?
I already forgot what
Difference. Difference.
different.
Is there anything in here about a difference? No, there's not.
Okay.
I remember you should know ratings would have to do with that default risk, right?
Mhm.
Less than triple B. And which of the following situations does an investor have unlimited risk? I would expect you to get this right just because you got the previous question right. That was about this scenario.
A.
Oh, I'm so impressed. Right on. Let's hope for you lots of option questions. By the way, you can have unlimited risk if you got a long positions. The longs don't have unlimited risk.
Would you
So
expect to probably have like 10 option
more
questions?
than that, more than that. I think 20, give or take 5. Now, people disagree with me. That seems to be the general consensus, and every draw is different. My friend Brian, he thinks more like 15, 10, 15. You know, by the way, then we get people who say I had 135 of them. I go, that's probably,
Oh, wow.
so, but you know, if you're good at options, you want to get less of them, and you're pretty good. You got those. I've always tried to get either where it's STC. I don't have any input there, but Kaplan to track in the bottom right or somewhere how many of the people taking the question actually get it right or wrong. So you could see a percentage of people who are practicing, and like if the question said 90% of the people get this right, that would be a hint that you probably should know it. And Kate, the reason I said I was so impressed is you got 2 questions in a row that most people miss. I don't
Wait,
have statistics on that,
where
but
do you see that percentage
you
when you?
don't. I'm saying wouldn't it
Oh,
be fun? They
okay.
don't. I think it would be kind of fun,
Yeah.
because then you'll be the other reason I'd like it because then you wouldn't feel bad if like it says 5% of the people get it right. You go, you know. And by the way, it would help like Kaplan or STC get rid of their poor questions because then we could come back and say, well, listen, if you wrote a question, only 5% of the people are getting right. It's probably a poor question.
Mhm.
Investing in a high risk direct participation program is most likely suitable for which of the following investors?
When I think of DPP, someone who has a large income, they are able to handle
Yeah,
loss.
I think you're right. And here's why I think you're right too, because of the time horizon. Even though this is where I struggle as a practitioner at one point in my career, because I've had older people want to get in partnerships. I have to tell my compliance officer is going to call you because he's going to think you shouldn't be buying green bananas. But I get why you want to invest in this. And I think you're right. I think there's 2 things: time horizon that makes that right, and earned income.
But what about like to the loss? Like they'll take losses and
Yeah, that's true too. So let's see. So if we have investing in a high risk would give us passive losses. And but it wouldn't be earned income. We know that can't be it, right? Because
yeah.
your point, passive income would only be passive losses. So yeah, that would be a good argument too, if you have passive income. So I think you're right. I don't think it's earned income. I like the young individual because of the time horizons. Now we got to decide between the young individual with mostly passive income, because you're right, passive losses. I was thinking, can he afford to lose the money, right?
Yeah.
Let's see, older individual has mostly earned income. That's out. So by the way, Dean's trick is A or D anyways, right?
Mm-hmm.
So what do you want, the older or the younger? I don't know, to be honest with you. I'd probably take A, and I'm probably going to miss it. But I think both these are our answers. It's going to be embarrassing if it's neither one of those.
I'm gonna go D.
You're going D? All right.
Oh man.
Yeah. For direct potential tax benefits. Okay, there's Dean, right? I said long term.
Okay.
I think I wouldn't feel bad about that miss at all. I could have just as easily missed it as well. But I like your pivot that you made. I like the pivot you made about this passive being the key.
Mm-hmm.
So you got to do a 50-50. An individual invested 65,000 in variable annuity and now has 80. Okay. If the annuitant dies. So remember, 65 was after tax money. That's our cost basis. 80, the difference there is what, 15? So that's money that hasn't had taxes paid on it yet. So now we got to say what happens to his beneficiary.
A.
Yeah, I'm not sure what the tax rules on that are, but yeah, that's right. That's be the same. I don't think you're going to see on the test the beneficiary. I think you'll just see the individual, and that would have been the right answer. Good job. By the way, that was when you missed previously. You got it right that time. So good job. What's the current yield of a 12-year, 10% bond trading at 105, callable in 5 years?
A.
I haven't done the math. I'm assuming you got it right because you have a perfect unblemished record as it relates to these kind of questions. And so very impressive. So let's hope you get 125 of these
You just
puppies.
throw in the 5 years, the
They do.
12.
You're getting good at that. That's exactly what they're trying to do. They're trying to do the Jedi mind trick on you. They're
Mhm.
trying to cloud your mind with all kinds of things that have nothing to do with answering this question. All we need is what it pays us, which is $100, by what it costs us, 1,050. That's it. An investor purchases euros in the spot market at 131. As a hedge, the investor buys a euro October 130 put at 0.60. This strategy would be profitable in if which of the two situations occur? I have an interesting question here. You know what I always tell people when they get these foreign currency questions is not to panic. To just, do what they would have done had there's been a stock that you bought the stock at 131 and you bought a 130 put on the stock at 0.60. If you don't freak out, you take a deep breath, I think you're going to be in pretty good shape.
Ugh, I don't know. I'm kind of gonna guess B.
Yeah, I think this would be interesting, right? Because Just like a stock, we would want the euro to go up because I own the euro. And so then I bought that put. So it'd be strike price, or excuse me, yes, the price 131 plus the 0.60 would be the break even. So 131.90 is profitable. And then you said the US dollar goes down, and that means the spot goes up. I think you're correct. Good job. By the way, there's a couple of questions like that, Kate, where I would have given you 3 or 4 points because that's a tough one. I mean, that is a tough one. So,
Yeah.
excellent. So, the key is just not to freak out. So I don't know how you did it correctly, but you did, right? I would have said 131 plus 0.60. My break even is 131.6. I'm a bull on the euro. So I need it above that. 131.90 is above that. And then what makes the euro go up? It's when the dollar goes down. Excellent, excellent, excellent. That's as nasty as you could encounter. I mean, now
Feel like they
did you
have.
get that right, or did you just guess B? You didn't use the guess B trick, right?
No, I actually did the calculations, but I was a little hesitant with
Good, good,
it.
excellent. That was excellent. That like I say, that should be worth more than 1 point. The yield for a zero coupon bond is based on. Well, like I said, one of the reasons we're doing this is different phraseology. I know you purchased the STC program and the Kaplan program, and whenever people are using different test prep vendors, they scores go up or down depending on what you're doing. And I do like getting comfortable with this phraseology, even though it's a little different. So it just requires us to read a little more careful. You should have been able to get A just out of there immediately because you should know
Yeah.
dividend.
Yeah. I'm between C and D.
You are correct. It is C or D because they don't have a fixed rate of interest. So I would say don't take anything that you don't know what it means, right? So, they're pretty good at making up answers that sound good. Like I had a guy, I asked him why he answered. Well, I never heard of it before, and I didn't see it in the book, and I thought it was the right answer. I said, well, if we've never talked about it, you've never seen it anywhere, it's not the right answer.
I'm gonna say C.
Yeah, I think given the answer set, that's the best answer, right? There's no such thing as a market-based premium. That's nonsensical. Which of the is generally of the greatest benefit to an investor in a limited partnership? So, which of these do you find most attractive? I like this one.
I want to say tax credits,
Yeah,
but
that's a dollar for dollar whack out of your tax bill. Absolutely. Do you know what type of partnerships you get that for?
like house
Low income housing,
rehab,
historic real estate. Under Rule 144, what is the holding period for restricted securities in a non-reporting company? So this means a company that isn't filing 10Qs and a 10K. This is not a public company.
pretty sure 6 months, but I'm trying to think. So,
Yeah, in most situations, it would be 6 months, but because it's a non-reporting company, it's 12 months.
oh,
I don't think you're going to see that. I actually think the 6 month is a better answer on the real test,
okay.
right? For most scenarios on the test, it'll be 6 months. But because this is a non-reporting company, not publicly held, it's a year. An investor who has been rapidly moving investments from one sector ETF to another is following what type of investment approach? I was going to say sector rotation, but that's not available to me.
Well, I know when they talk about ETF, I want to say index, but then I think the B and C, they're like two
B and
opposite.
C are fundamental analysis, so they're out. B and C is where I either start with the company, then the industry, then the economy, right? Or I start with the economy, then the industry, then the stock.
Yeah.
And so that would be out. I wouldn't be using ETFs for either of those.
I'm gonna say A.
I'm going to think it's D just because if it was just plain indexing, I might get it wrong. But, we're trying to go from one place to another in terms of momentum. Let's see. You might get it right, though. Let's see. Yeah. Now, again, I think it was tough because I was looking for sector rotation. That wasn't available to me. Indexing would be passive. So the thing that made me toss out the index was rapidly moving from one sector to another. Right. So that means more like I'm trading than I am, investing. So not a bad miss though. Who knows? I could have missed that just as easily. Oh man. If
This-
you miss this, I'm going to jump
Yeah.
through this screen. I'm going to grab you by the neck.
Now you're making me nervous.
Well, that's,
It's D.
what's that?
D as in dog.
Hey, woohoo! Woo! Now, did you use the Sesame Street trick or did you know it?
I knew it.
Right? Because we have more than, more than, more than.
Yeah.
Okay. By the way, that's why we're doing it. We know now when you get that one on the test, aim and shoot, point and click. For inherited securities, future gains or losses are treated as
It's not tax-free income.
a never, unless it's a muni.
I want to say it's not long-term or short-term. I want to say ordinary income, but
Oh, that would be a bad miss because you should know ordinary income is never securities. You might get taxed at ordinary income tax rates, but in your securities, that part of your portfolio, it's always going to be a capital gain or loss.
right. Short-term.
This is one of those weird ones. It's actually long term. So that's one of the advantages of it. And that's what we're doing. We're learning new things along the way. But inherited securities is always long term. So, very rarely does the IRS give you kind of a Benny, and here's a Benny for you if you inherit securities. So, you said, well, my grandma bought it last week. And I said, well, for you, Kate, it's still long term. Customer sells 1,000 shares of stock and asks for the actual time of the execution. For a branch office manager, what is the appropriate action? Kind of a weird one.
C.
Yeah, I think that's going to be, sounds like the most reasonable thing, doesn't it?
Mhm.
Right. So I think I would have done process elimination. Right. I'm certainly not going to tell them it's impossible to know the time of the trade.
Yeah.
A customer is willing to accept a partial execution in order to buy up to 800 shares at 30. So then I see that, I say, well, it can't be fill or kill.
Mhm.
If the client does not want the unexecuted portion to be left open, this order should be entered as
So he doesn't want the C.
C as in Charlie.
Oh.
Right on. Immediate or cancel. Good job. Remember, not held would mean you're giving it to the floor broker, and the
Mhm.
floor broker is making a decision about time and price. Mortgage-backed security that's separated in different maturity groups are referred to as tranches is
A.
yeah, you're pretty good at your aim and shoot point and click questions. So two things you're pretty good at: recognition, aim and shoot point and click, and you're really good at bond prices and yield questions. So I think that's going to put you in pretty good stead. I mean, you're going to get some points for that. What capacity is reported by a member firm that has conducted a net basis transaction.
I want to say principal, but I'm going back and forth between.
Yeah, you're right. It's going to be one of these principal answers. So do you want
Yeah.
riskless principal, or net basis principal?
I'm between A and B.
I think that's a good place to be. Um, I would think that maybe I would say something like, and we'll see if we get it right, but I would say something like, well, if it was B, I don't think they would have this extra junk in it. That would just be a principal trade. So this must be somehow different.
Riskless.
Yeah, I think. Let's see if that's the right answer. I think it's going to be the right answer. Oh, no. And net basis, they're holding this by acquires the stock on a principal basis, a different price, since both legs are different prices. Okay, that was a tough one. I would have, the reason I thought it might be riskless principal because I'm not at risk, right? I'm marking the ticket up. So that was a tough one. Which of the following objectives is the least suitable reason for investing in a mutual fund? I kind of like this one. Least suitable.
B, short-term trading.
Yeah, mutual funds are supposed to be for the long term. When is a feasibility study created?
So when you think feasibility, you think revenue bond. So
That's exactly right.
year C, and I would say before.
Excellent. 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 Regarding a fixed income UIT, which of the following statements is true?
I'm gonna go A.
Ugh. Ugh, we haven't said this in what, an hour? Bad miss. And it's a bad miss because earlier you had that right. You told me that you knew that UITs were passively managed and it was a fixed portfolio. So I don't know what happened to that. So that's the first bad miss you've had. And I think I've only said bad miss in this practice test, what, 2, 3 times? So that'll work. So I don't want to get you wobbly on anything. But this is one that earlier you had a question just like this on a UT, I believe. And who knows, I could be losing it. And we're going to our third hour now. However, they're passively managed. The assets are professionally selected, but not managed. So I thought you were going to get this right by process of elimination because I thought you would know that A is not true. And I thought you would know that B is not true. And so I thought you were going to get to the 50-50 here. And to be honest with you, I wouldn't care if you missed it after you got to the 50-50, but they are redeemable. So UIT is a type of investment that issues redeemable or units. As is true with mutual funds, they can repurchase units of the NAV. UITs are considered supervised but not managed. Since UITs have no investment advisors, they don't have an advisory fee. Fixed income UITs typically consist of portfolios, bonds that mature at a fixed date. Boom. And again, as your tutor, I know you won't miss it again. The amortization of a man-made asset. I like that, a man-made asset. I usually say an asset that has a useful life. And so I think what they're talking about here is man-made. It's not oil and gas. It's not gold. It's something else. It's the pickup truck I'm using in my mowing service. Over expected useful life is known as or described as.
B.
Yeah, it's a non-cash expense. Good job. You're pretty good on balance sheet stuff too. A call option is out of the money if. Out of the money if.
That's when the current market, if the current market value would be less than the strike.
Right on. Excellent. Pretty strong on options. Pretty strong on options. Like it. An investor wants to focus his portfolio on investments that will outperform the market. Wow. He should choose stocks that have.
Outperform the market, they're exceeding the returns.
That's right.
Uh, this one I'm a little torn. Uh, how would you know the payout, like dividend payout ratio?
Well, remember, high dividend payout ratio means that the company pays out a larger portion of its earnings as a dividend. So if you're a growth company, you would typically not be paying out dividends if any dividends low, because you're going to retain it as earnings to build the business.
Okay. So then B.
Right on, right? And you would expect that it'll have earnings will grow, so you're willing to pay a higher price, right? So higher PEs are associated with like NVIDIA, companies like that. Lower PEs are more like, bank stocks, things like that. The number of 529 plans that can be opened for one beneficiary in a single state is.
Wait, no, 529 that can be open for one beneficiary in the state. So they're saying like,
Yeah, so I would think of a kid. So there's a kid, and we're asking how many 529 plans can we open up for that kid?
just one.
Yeah, it depends how we're doing it, but yeah, it would be unlimited because the number can be opened by many different people. So it's one kid, but
But
they could have more than one
multiple.
529 plan for
Okay.
that kid. Right. So that was more of a grammar thing than anything. Which of the following is will not affect the SMA in a long margin account, the special memorandum to your account. For test purposes, I think you could think, Kate, it's not true, but for test purposes, you could think of SMA and excess equity as being the same thing, even though they're not.
Isn't it stock dividend?
Excellent, man. Sometimes you just grab the answer and boom. I love it. I love it. Again, you're getting some things right that the little people usually are wobbly on, so that's a pretty good sign.
Then I'm missing things that I should.
Well, that's all right. That's part of the process. I think you're on track. I don't know what your score is presently, but I think we're in good shape. I think we're in pretty good shape. Bull Traders is a syndicate member for an IPO global transfer. The firm intends to distribute some of its allocated shares to a selling group comprised of smaller broker dealers. How will Bull Traders determine the amount to be paid to selling group members?
So when I think selling group, I think the concession.
That's
So
exactly correct. That's exactly what that is.
I would say, wait, C, right?
I'm sorry, C?
Wait, concession, right?
Well, you're correct. It's called the concession. But I don't know how you're coming up where I can pay you 5% of the offering
Right,
price.
okay. I think I just saw that word and I jumped to it, but let me.
Okay, because yeah, I mean so what you're saying if you tell me C is that if I'm a selling group member in a $10 offering, I can get 5%, that would be 50 cents.
D.
The compensation is determined based on the total number of shares. Pay per share to selling is based on the total number sold by the selling group member. I like that. The compensation B, the compensation paid to selling group members is established in the selling group agreement. I think it's either B or D. Yeah, right, because we're gonna have a selling group agreement. But I think the total, I think D would have been right if they said total compensation. So
Okay.
your total compensation would be based on the number of shares. But here they're just saying you can't be, I like B better because B is saying that if you're paying 50 cents, it's 50 cents to everybody. Right.
Okay.
So not a bad miss. Are selling group members liable for unsold securities?
No.
Right on. The one they ask on the test is they have a bond underwriting. You get a half a point as your concession and you sell 50,000 bonds. And then they ask what's your compensation to the firm. At the opening of the market, a client has an existing margin account, sells 2,000 of ABC held an account, and then later in the afternoon buys 2,000 of XYZ. What impact do these trades have on his account? What is this, our third, fourth margin question? So we shouldn't be
Mhm.
encountering any more of these. I like to think like a margin clerk in these questions.
Would there be no change?
Yeah, this is the one time where, right? It's called same day substitution, right? As a margin clerk, I just wait till the end of the day and then I net it and see what the difference is. So you are correct. Good job. Which of the following statements is true of systematic risk? Okay.
A.
Excellent. 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 I was going to be upset if you missed that question.
Yeah, that would have been
The
bad.
opposite, right? An OID, aka a zero. OID means zero. Cost base increase each year. Well, thank you so much. I knew that, but they told it to us anyways. What is the proper term for that increase?
But they're not telling you if it's discount or premium.
Yeah, that's true. They're not telling you that. It still is going to be the right answer, whether it was discount or premium. It's only Dean that gives it a different name going down than going up.
Oh, discount. Oh, accretion.
Yeah,
I didn't, yeah. I need to read the question all the
no,
way.
that's all right. It's important, but you're doing fine. We're into our third hour, so they can. I don't know about you, but my reading skills are not as good on
Yeah.
question 108 as they are on question 20. By the way, I'm not being facetious. Give yourself permission at the test to get up and take a break and use the bathroom and splash some water, get some fresh air. I think right about 108, is where we're at now. Sometimes I think people do get tired, and rather than stepping away or taking a mental trip to Tahiti, and then come back, don't go to Tahiti too long.
Yeah.
I think that sometimes when people barely miss the mark, sometimes I wonder if it's just they got tired towards the end
Yeah.
and then they just started, falling apart a little bit, like B, oh, I don't care. I got to find a new job. C, instead of like, staying in the fight
Yeah.
and, keep moving down the field, matriculating into passing position. All the following statements are true regarding mutual funds, except
C.
yeah, right on. At the end of the year, an investor's capital gains and losses result in a net loss of 5,000. Which of the following statements is true? This is very much a test question.
So I know that you can deduct 3,000, so I'm gonna say D.
I like that. No reason for you not to be confident in yourself in that answer. That's exactly correct. And as your tutor, you are really good at recognition. And Kate, I got to tell you, I know how much work it is to memorize all this crap. I'm joking, but I shouldn't say crap. Testable content.
Yeah, yeah.
Testable content. And remember, the things that you're good at, you are. I worry when people have memorized things that are testable. Like a guy was showing me his flashcards. I felt like I told him this. I literally said, maybe we should go through the flashcards and you show it to me on the screen. I'll tell you whether to keep it or toss it because I'm afraid you might be memorizing things that
Aren't, yeah,
aren't testable, right? And when then people tell me they like buy flashcards, I kind of think making your own is okay, except making up ones that aren't flashcards on things that won't be testable. So thus far, the stuff you've memorized is testable. So it's not like you've wasted any brain space on that work to memorize the recognition questions. That $3,000 is indeed just a recognition question. All the following are true concerning market-wide circuit breakers, except.
why do they have to use that market-wide circuit breakers? Okay,
Well, I think they're trying to bait you into a particular answer.
yeah. I'm guessing A.
No, that's incorrect. They are based on the S&P 500,
Okay.
right? So they're not done on a monthly basis. That's the thing that's not true. They're calculated daily. I wouldn't worry about that. What I would know about this is that it's 7, 13, and 20.
I knew that. And
It's
then they
7
kept
and
going.
13 or 15. What's 20? 20, we call it a day. Maybe tomorrow will be better, right? So that's what you need to know. So I wouldn't worry about this one at all. According to an asset allocation model, which of the following is the appropriate mix of equity and debt for a 30-year-old investor? So you know the cocktail party trick on how to answer this?
You take 100 minus 30.
Yeah, so we're going to take 100 minus 30.
It's 70 for equity and 30 for debt.
Boom. I don't like that as a real practitioner in the real world. Good news, Kate, you get to leave Series 7 Fantasyland. I'm
After.
stuck here permanently. No wonder I'm demented. So what I'm saying is I doubt I would ask a customer how old are you? He says 30, and I go, okay, we got it, 70%. But what I do like about it is a cocktail party trick, or I should say a test taking trick, is this one's pretty straightforward. But the reason I like it is it at least gets me a 50-50. So when they give me an asset allocation model question like this one's just spot on. But even if it wasn't spot on, I could toss out two, right? Which of the following risks is greatest concern to an investor who owns a 5% bond and interest rates have fallen to 3?
When it's fallen, they have the risk of it being called.
You are a bond broker in the making. I mean, you are so solid on bonds. On Series 7, we used to call it the stockbroker's exam.
Yeah.
And I always thought that we should, if there was truth in labeling, call it the bond broker's exam because there are way more questions on bonds than there are stocks. So again, as your tutor, I love that you're strong on bonds. I love that you're strong on options because you're going to get payment from that. You're going to get dividends on that because you're going to get points. You're going to get points. And an investor recently paid 102 for a corporate bond that's trading flat. Do you know what that means?
Like no crude.
Yeah, right on. Man, I'm telling you, remember, that means no calculation of accrued interest. Exactly what that means. The bond's coupon is 4. The number of accrued interest days since is 88. Excluding the settlement, what is the total price paid for the bond? You told me the right answer. You said trading flat means no calculation of accrued interest.
So just would it be A then?
Yeah.
Okay.
Boom.
Oh,
Right.
so they're just trying to trick you with the
Well,
88.
be careful, my friend. Don't be looking for tricks. I mean, yeah, I know you've been doing Kaplan and STC and
When I looked at this, I'm like, do I have to do like
well, be careful. Be careful. Don't
camerization?
no,
Like,
be careful. Don't be second guessing yourself. Don't be looking for tricks.
okay.
I call that bug fever. You get an easy question, go, oh man, it can't be that easy. They're trying to trick me. No, only the test prep vendors are trying to trick you.
They like these questions.
Yeah. Investor purchases a muni bond on Monday, June 6th. The bond's interest payments are November 1st and May 1st. The buyer will need to pay the seller the number of days of accrued interest for. So I bought on June 6th. It paid interest last in May. So you owe me for all of May, 30 days in May.
Mhm.
Trade date up to but not including settlement would be 6 days. So it's now going to be 36 days. But this is written as of, well, let's see, maybe they've changed it. I think they're going to want 37. Who cares? Not going to be there. 36. There you go. An investor is long a DFA May 40 call and short a DFA May 55 call. This position is referred to as
Vertical spread.
oh man, you are so good.
What's a butterfly spread?
It's not on the test.
It's like I've
A
never.
butterfly spread is two spreads, a spread outside of a spread,
Okay.
right? So I usually think of it as a short straddle with a long straddle outside it. It's not on the test. It's a distractor. Wrong answer, right? So people go, I saw it on my test. You told me it wasn't on the test. I said, it's a distractor. It's a
Yeah.
wrong answer. If a company is conducting a rights offering, an investor who intends to purchase the company stock on regular way basis with rights attached must
So T+2. Regular way, right?
yeah, I don't even think you need to worry about this. You need to know it's short term and exercisable below. And we're going to send the rights into the rights or transfer agent. I think we can still get it though, based on principle of mutual exclusion.
I don't know. Before record date, I think. So I'm gonna say B.
Yeah, I think that was a good answer given this information, right? We should know it's about the record date, not the payable date. So we should have been able to toss out C or D. And then we know 50-50, and we know that after the record date means it doesn't apply to you. Right. So good answer. That was a good answer. Which indexes focuses on small cap performance?
I get these ones confused. It's either A or C, but I'm gonna go A.
All right. I would have been upset if you missed the recognition because you're good at those. C would have been the total US stock market, right? S&P comes up quite a bit. That's the market return. So whenever they're talking about the market or the VIX or something like that, they're talking about the S&P. Individual purchases one XYZ 40 call for 4 and one XYZ 50 call for 2. When the market price is 43, who cares? The individual's break even is
B 46.
yeah, this is kind of interesting. I'm not sure why they didn't ask us our downside break even, right?
Mhm.
Buying 2 calls and 1 call, we're out a total of 6. So yeah, good job. Excellent. You're really good at options because that's a pretty tough options question, actually, as compared to like the standard version. At issuance, all the following are possible maturities for a T note, except.
A, that's too long.
Yeah,
12.
you are rocking and roll. You're rocking and rolling. For a mutual fund, how is the NAV per share calculated?
So I know it's not D.
You're correct. It's not D.
C,
I haven't had to say this in a while.
bad miss. Is
Yeah,
it A?
it's A. All right.
Okay.
Yeah, that was a bad miss. I wouldn't worry about it, but and then remember that would be the NAV plus the sales charge equals the public offering price.
Mhm.
For a municipal bond offering, the dated date is.
A,
I'm telling you, stuff you're good at, you're good at. An investment company is best described as.
when they say investment company, I think private entity.
No, you should be thinking mutual fund.
Really?
Investment Company Act of 1940, my friend.
Okay. C,
I'm sorry?
C.
D as in dog?
I said C, but I don't think that's right.
No, that's a mutual fund. It's D. That's a executes transactions in the account of others. That's a broker dealer.
Okay.
That's a tough one. I would call that a bad miss. I'm not because of the grammar. I think the grammar there was a little more not straightforward as it would be on the test. An investor purchased a 5% corporate bond priced at 99. The last interest payment date was made on January 15th and the trade date was April 23rd. What was the investor's total purchase price? So here we need the dollar amount and then the accrued interest. I'm going to use what I call dead reckoning. And what I mean by dead reckoning, it says the investor's total purchase price. So I know I'm going to pay $9.90, right?
Mhm.
If the last interest payment date was made on July and the trade date was Tuesday, April 23rd. So this is a J&J 15. And I'm just looking to see here that it's got to be something north of 990. Right. So I don't even think I do the math. And I think STC has been asking us to do this math more often than not. I haven't had anybody on debrief tell me they have actually had to calculate this in a long time. And even number days of accrued interest is very rare and low probability. But let me explain what I'm about to do now. I'm going to do dead reckoning here, Kate.
Okay.
What I mean by that is I know that it's going to be the purchase price plus the dollar amount of the accrued interest. So the purchase price was $9.90. And so I know it's got to be something above that. And there's only one choice that is above that. So
Okay.
see how I did that? I just kind of eyeballed it and said, well, it can't be A because that and it can't be D and it can't be C. So a 20-year bond is currently priced at 90. It has a conversion price of 50. Oh my. This is testable. The common stock is at 35. What is parity price of the stock? This is very much a test question.
A 20.
Ah,
Oh, what did I do wrong?
how'd you get
Oh
20?
wait. Oh, I think I know what I did.
How'd you get 20?
I stopped
20
at
is the conversion ratio. Now I see how you got that. You did what you were supposed to do, was reset to par and divide by 50 and find out this is convertible into 20 shares.
answer's 45.
There you go.
I
And man,
stopped.
that's definitely testable. So, what's that? My fourth bad miss? That was a bad one. But yeah, I see where you got the 20. At least I was able to figure out how you messed it up. You're gonna have to do that. You feel comfortable with that?
Yeah. And then the 35, is that you're not
I didn't, the 35, I didn't, you're either gonna have to do parity of the common, which you divide, or parity of the bond where you multiply. So if they asked you parity of the bond, you would have taken the current market price of the stock and multiplied by 20 shares.
Mhm.
Very decimal. Investment banker has entered into an underwriting agreement whereby a minimum percentage of the total offering must be sold or it will be canceled. The offering is considered
An all or none minimum. I don't think it's A or C,
you're correct.
but when they say minimum percentage, it makes me want to say minimal max, but
Yeah, but the idea is that, we're going to cancel it.
D, all or
Yeah,
none.
we don't sell all, whatever that is. Oh, my bad. The minimum, the green shoe, right? So we have to meet the green shoe first. So you were correct. That one's on me. Mini max. A certain level, yeah, that was Dean's fault because it said a percentage. So you actually read it correctly and I did not. What is the prime rate?
A,
Excellent. Which of the following factors is not used in determining the value of an annuity unit?
so one of your tips, why don't you say A or C because they're pretty much the same.
Yeah, I don't know. Yeah, let's see if that'll work. And remember, we only use tricks if we don't know. So we don't know, we go to the trick. Yeah. This is kind of a tough one.
C,
Yeah, the assumed interest rate, remember, not used because we already have it. The assumed interest rate is what makes it goes up and down. I think the grammar on that question was atrocious because I would have said, well, the error is no, the error is about the payment, right? Going up or down. That was a real tough one. I wouldn't worry about that one at all. I would know that error though,
okay.
and that's what makes the check go up or down because we're going to turn the annuity units into our accumulation units into annuity units. Tough, tough, tough. A customer receives a verbal confirmation their securities were sold at 28.35. This is testable. Clerical error subsequently discovers The corrected price is $27.85. It's shown under confirmation. Which of the following statements is correct? What this is testing on, Kate, this test was error in execution versus an error in a report.
C.
And I say, sorry, that happens. That's what you're obligated. Now, if she said put in a sell limit and we messed it up, that's going to be on us. But an error in report. Now, if that happens too often, maybe she wants to find another broker. But a bank sells its credit card receivables to a trust. The trust creates a bond backed by these receivables. This is an asset-backed security, collateral trust bond. The bank is responsible. The type of security is backed by the FDIC.
B.
No, collateral trusts are secured by are securities placed in escrow. This would be an asset-backed security. It's like a CMO, where we're carving up the credit card receivables. I don't think you'll see that, but this is like a CMO. Collateral trust would be marketable securities placed in an escrow account. Not a bad miss, but it's a miss. We could do this with car loans, credit card receivables, bonds. Those are all what we call asset-backed securities, and they pass through. So not a bad miss, not a bad miss at all. A customer is in a federally tax bracket 35 and has a state of 7. My goodness. How blessed is this person? That's a combined bracket of 42%. Woo! Which of the following investments would provide him the best after-tax yield? Now, if I'm lazy and we're coming towards the end, I would say that, rich people buy munis and poor people buy corporates. And he looks like he's a rich person to me. So I'm going to, if I don't want to do the math, I call this projecting the answer. I think it's going to be A.
That's what I thought.
But, let's do the math. So how are we going to do the math? We're going to take the 6.25. We can do either. We can start with the muni, go to the corporate, go to the muni. This is called tax-free, tax equivalent. I'm going to start with that muni because that speaks to me. So I'm going to start there. And I'm going to take the 6.25 and I'm going to divide by, oh my God, 0.42. What's the reciprocal of that? 58. Is that right? Wow. I get 10.7. Is that what you get when you do the tax? I say, Kate, you are so rich that in your bracket, getting 6.5, 6.25, not paying taxes in your state, New York State, California, whatever, is 10.8. By the way, yeah, I do think you have a margin of safety, Kate. What I mean by margin of safety is if I feel I have a margin of safety, so over the years I've had to take the 7 more than once, obviously Dina is going to be stressed about it. So I would be when I've, margin of safety, dead reckoning means I'm just going to say 8 speaks to me, boom, but you might want to do the math, right? So it's up to you. I do think you have a margin of safety. FINRA rules require confirmation statements to include all the following, except
D.
right on. Good job. All that you should oh no. Regard all the following except. I would have missed this too. Let's see what to see. The
Dang.
contraparty isn't on the confirmation. It's available upon request. So I'm not sure why we missed this. Let's read the rationale. Both transaction dates and settlements, I agree. The name of the contraparty must either be disclosed or offered to be provided. Oh man, they're splitting hairs on that. We said the date on which the order was entered is the right answer. I don't like this one at all. The date of the transaction is required to be included. However, the date, oh man, what a distinction they're making. So they're telling us the date it was executed, but not the date it was entered, like if it's a GTC. Okay, man, I'll tell you. STC, really? Oh my, I mean, Which of the following states is true regarding UITs? Well, let's see here. Which of the following is true?
So you know that B is wrong because there
Because
was,
you missed it before. Isn't that part of
yeah.
the process? You're correct. You are correct,
You
Kate.
know that B is wrong because there's no they're non-managed.
That's right. So what matches up with non-managed?
C,
I'm sorry.
C,
C is in Charlie.
yeah.
Boom. Fixed portfolio, passive managed. As your tutor, I also like you don't miss the same thing twice. Right. So that's good. I mean, sometimes people keep missing over and over. Like, for example, oh man, I probably shouldn't do this. This is high risk. What is the definition of correspondence?
Oh my gosh, don't do this to me. I know it's 25 or fewer.
Yay! Yay! A donor to a 529 savings plan.
D.
Right on.
Oh,
Oh, no, cannot withdraw. Oh, I read it wrong. Did you say B as in boy or D? I
I,
said D, cannot withdraw the funds. You can, but then you pay the penalty. So
I
another gotcha question for us,
thought,
right?
yeah.
And I've got us both on that one. I didn't read the answer set. RTFA is what I always say, Kate. I didn't follow my own advice. And I just went down to D and I liked it a lot.
Name
And then it's not that D is wrong. It's just that B is what?
better.
Better. So yeah, boy, it got me on that one. Why are warrants occasionally attached to a bond offering?
I know it makes it more attractive and you want to,
Yeah,
so
so if it's more attractive, you're on the right track. If
you're
it
gonna
makes the bond more attractive, then what is the result of that?
it's gonna increase the interest payment or no,
Well, remember our trick. It's either A or B, because they
reduce.
can't both be true. So you already gave me the answer. You just got to translate. You said the warrants would make the bond more attractive. And so if the bond is more attractive, that means the issuer,
Reduces. A.
right on. So sometimes that happens on the test, right? You have the right answer. And then
Mhm.
what you got to do is then connect it to what you're being offered, right? So you nailed it right out of the gate. You said it makes it more attractive. You were correct. And then you got to say, okay, boom. And then the other thing on this one, we could have used the trick knowing that it's either A or B, right? Because they say opposite things. You can't leave those in the same answer set. You can't take C or D because that means you're saying that both those things are true and that they both can't be true, right? A double barrel bond is
B.
B as in boy. Oh, I such a downer
Okay,
that
wait, let me think. Hold
we got
on.
to end on a bad miss.
Yeah.
The first barrel is the revenue. That's the first pledge or promise, the user fee. The user fee is
Oh,
insufficient.
okay. I need to read the answers better.
Well, it's our last question. We've been at it almost 3 hours. So
C,
what's your new answer?
C,
C is in Charlie?
yeah.
Yay. All right, here we go.
Oh gosh.
That'll do it. That'll do it. That's fine. That's where we need to be, mid 70s on something we haven't seen. I think we went through these
Yeah.
before. I think two of these are on me. I think I missed a couple where I didn't read the 10% penalty was better than I can't take the money. I can't. I just got to pay the penalty. All missed. There we go. I'm not sure how we do this. How do we go? All questions review.
Scroll down. It'll show you all of them.
Oh, there we go. Okay. Well, see, I don't use STC as much as I should. Yeah, we talked about that one. That wasn't a bad miss. The only thing you missed that is it didn't have a P instead of re,
Mhm.
right? So that wasn't a bad miss. That was a bad miss. You should know that's 6 months. And you have to disgorge the profits to the issuers. That was one of our bad misses. Yeah, we
Bad
should have known that's unsuitable.
Yeah.
That was a bad miss. This one, you're not going to see a lot of this, but customers sell at the low price and they buy at the high price. So the bid is what I'm willing to buy it into my inventory at. So if you're a customer selling to me, you're going to get my bid. If you're a customer and you're buying from my inventory, then you're going to pay the ask. So I like this answer set. If this said a customer wants to buy, it would have been C as in Charlie. So this was sell, it's B as in boy. So, I think that was Dean just squeezing the trigger on you. I squeezed the trigger because you said commercial paper, which you were correct was 270, but it wasn't about commercial paper. It was about money markets in general. I think we're okay on that now, but that is very testable.
Mhm.
Immediate annuity, yeah, that means you want to get your income stream right now. I wouldn't worry about that at all. Now we know and what a BIP is. Low probability, low probability.
That was a bad miss.
Yeah, that was a bad miss. I think you're pretty good at bonds. I think I was one of your only bond misses. So for the bond girl, bond lady, that's a bad miss for the bond lady because you're pretty damn good on bonds. I don't know, very low probability. It's the only one that has a bid that's numerically higher just because it's trading at that discount. So a 4.87 discount from face is indeed a lower number than a 4.65 discount from face. It used to be there a lot. I haven't had anybody tell me this, you should know you don't give dividends unless the board declares it.
Oh.
And you should know preferred or fixed, but not common. You had this right. You're pretty good on options, so I'm not upset with that at all. But debit, it's your risk. Credit, it's your gain. Right. So you had I'm not worried you're on the backside because that means you're in the game. Right. So there we talked about that. Now, you answered A would have been the right answer to the partnership agreement, not the subscription agreement. Yeah, you should have known here the capital preservation. Maybe you're just like me and you're prejudicial against inflation, but there's nothing safer than a US Treasury. So when they say safety of principal or capital preservation, we should be thinking treasuries. Who cares? I mean, that's a tough one. You got to pay the preferred stockholders. You weren't going to miss this one again, right? It's not so much about the public appearance, about knowing the sales ledger's retail communication. And investing on the high risk, there we go. I think we agreed on that one that it was a 50-50 one way or the other. I
Yeah.
think you took the older guy and I took the younger guy just because of the time horizon. Yeah, I wouldn't worry about that on the test. It's more often not going to be 6 months. I don't think you're going to see non-reporting companies on your exam. Yeah, indexing would be for test purposes passive. I was looking for sector rotation, and the closest thing to that was momentum. Yeah, now we know. You always get that long-term uninherited securities. Yeah, that one was kind of tough. I went at riskless principal. This might have been my miss because we're, selling it with no risk, but you won't miss that again. You got the UITs down. Unlimited, we misinterpreted the grammar on that one. Yeah, you wanted D and I wanted B. But that was an easy miss, right? Because the selling group agreement establishes that. Now you know that's done daily. Who cares? I think you're okay on the 7, the 13, the 20. Uh, I didn't know whether they wanted 36 or 37 based on changes. You won't see any of this. This whole week has been confirmed. If you're watching the replay, May 28th, everything is going to T+1, including corporates and munis. That means you won't see them for many weeks or months. That was a bad mess. I didn't like the grammar in the question, but you should know investment company means mutual fund. So if we would have said a mutual fund is best described, then I think you would have got it. So next time you see investment company, just think mutual fund. I missed this one. I didn't catch the percentage. You read this one correctly. I did not read this correctly. So I missed the percentage. You got this right. I got it wrong. It was the minimax. So that one's on Dean, not on you. I didn't like the grammar in this thing. I think this is kind of weirdly worded, but I would know that the error is how payments go up or down, right? It's not really a value part of the valuation. It's just whether the check is going up or down. So, yeah, I think that's testable, but not in that form. Now, that's an asset-backed security. It's not a collateral trust bond, which is marketable securities. This isn't securities. These are credit card receivables. So, uh, I don't like this one at all. I missed this one. This one's on me. I always tell people the contraparty is not on the confirm. It's available upon request. Where we miss this is it's the date of the execution. I think when you have to explain to me how we missed it in the rationale, I don't think it's a good question, but it is what it is, right? I think I missed this one. I think we both missed this one because we went right to the D choice. And it's not that we got it wrong because D is wrong. It's that B is better. We can get the money. We're just going to have to pay the penalty. All right. Well, thank you, Todd and the STC team for allowing our viewers a free look on STC content. I will put a link where if you want to buy, we did supplemental exam 3. So if you want to buy that, you can do it. It's $91. Thanks, Kate, for giving everybody a free ride on your journey through this. 75%. You should feel really comfortable with that. I think mid-70s is where people need to be to make their mark. So I'm sure you're going to make your mark. Remember, inch by inch, your Series 7's a cinch. Yard by yard, your Series 7 is art.